Jeremy Harper here. Want to talk about RSU or restricted stock units and how they impact your mortgage application. Getting a lot of questions around this. So what's an RSU? So it's part of a comp package for employees. Typically, you'll see them issued by traditionally US tech companies, or you're starting to see that occur with some companies that have founded in Australia and listed over in the US, typically listed on the NASDAQ. And as part of their employment package, they are granted units or stock into that company every year for their employment. And typically there's a restriction around the vesting period of, say, 3 years to be gainfully employed before those stock are vested and become income for that employee that's holding those. So similar to a bonus income that's received on a cash basis, we can use a cash bonus on our mortgage application. A lot of questions around what about if my comp package, 50% of that is income from my RSUs. How will the banks in Australia look at that? So they're a little bit more conservative. So there's a couple of things we need to think about. Number one, it's income that is accepted on exception basis from credit. So typically it'll be a no, but we have to go back and make a case for that. Number two, it has to be listed in a well-known stock exchange. So obviously in America, the NASDAQ or equivalent stock exchange, well-known international company, so the bank's comfortable. And then we need to look at the vesting and the grant periods around that. So we want to see a history of at least 3 years of it being granted, the units every year to the employee. So we've got that history, and we can see that vest into the future. The banks will do a calculation looking at the share price over those financial years when they're granted and when they're vested, and we'll take quite a conservative approach around the share price for that year. And the reason why they do that is purely because with some of these tech companies, the share price can fluctuate 40, 50% up and down every year. So they want to take a conservative approach and not ensuring that we're taking a income position on a high share price, because if that collapses in the following 6 months, then we've obviously got a shortfall in terms of serviceability if we're trying to use that income from a borrowing capacity point of view. So key takeaways is if that's something that applies to yourself, yes, it can be looked at on an exception basis. We need to do a calculation. And more importantly, you need to be with that employer for a number of years. So if you're just receiving some RSUs as a bit of a sign-on bonus and that's not going to continue, then it's going to be very hard to use that income for borrowing capacities on the mortgage application. But if it's something that's in the contract, you're receiving every year, we can see that there's a history. That is something we could look at getting an exception. If you've got any questions, please let us know. Thank you.